Welcome back to XRP Spotlight, your go-to channel for clear, fast-moving, and real-time updates from the world of XRP and the broader crypto market. Today's headline is making waves across the trading community. XRP Ledger breaks 746 million threshold. Is market-wide sell-off incoming? And in today's video, we are breaking everything down in simple, honest terms so you understand exactly what is happening behind the charts, the on-chain activity, and the price action that traders are watching very closely right now. Because while the surface-level data may look active, the real question everyone is asking is whether this is healthy network growth or a warning signal of deeper market pressure building underneath XRP. Right now, XRP is sitting around the $1.20 range, and the overall tone in the market is still leaning bearish. What makes this situation more important is that XRP has already broken below a key multi-month support zone near $1.30, which had previously acted as a strong defensive level for buyers. Once that level failed, momentum shifted quickly, and sellers started taking more control of the trend. This kind of breakdown doesn't just affect short-term traders, it also changes sentiment across the entire market. Many investors who were previously waiting for a bounce are now starting to question whether XRP is entering a deeper correction phase rather than just a temporary pullback. And when price loses a major support level like this, it often takes time before confidence returns. At the same time, something interesting is happening under the surface on the XRP ledger. On-chain activity has actually increased, not decreased, which is why this situation is confusing for many traders. Payment volume between accounts has now surpassed 746 million XRP, which is a significant spike when compared to recent averages. Even more interesting is that just a few days before this, there was an even larger surge close to 1.5 billion XRP moving through the network. On top of that, daily transaction counts have remained consistently high, hovering around the 1 million transactions per day mark. At first glance, this level of activity might seem like a strong bullish signal, suggesting that usage and demand for the network are increasing even during a price decline. However, the reality is more complex than it appears. Increased network activity does not automatically translate into buying pressure or upward price movement. In many cases, especially in crypto markets, spikes in transaction volume can come from multiple sources that are not directly related to retail or institutional accumulation. This includes internal wallet reshuffling, exchange-related transfers, liquidity movements, or even large holders repositioning their funds during volatile conditions. So while the XRP ledger is clearly seeing heavy usage, the important detail is that we cannot assume all of this activity represents new demand entering the market. That distinction is critical, especially when price action is moving in the opposite direction of on-chain volume. In fact, when we look at XRP's price behavior alongside this surge in activity, the message becomes more cautious. Despite all the increased movement on the ledger, XRP has continued to trend downward rather than stabilize or recover. This creates a divergence that traders pay close attention to, because it suggests that higher transaction volume alone is not strong enough to counteract the broader selling pressure currently dominating the market. When price falls while activity rises, it often signals that the underlying flow of coins may not be as bullish as the raw numbers suggest. Instead, it raises the possibility that a portion of that activity is related to distribution or repositioning rather than accumulation. From a technical perspective, the chart structure is also sending warning signals. XRP recently broke down from a descending triangle pattern that had been forming over several months. This type of pattern is widely watched by traders because it often signals continuation to the downside once support breaks. What makes this breakdown more significant is that it happened alongside rising volume, which typically confirms that sellers are active and committed. Instead of buyers stepping in to defend key levels, the market saw increased pressure pushing price lower. This combination of technical breakdown and rising activity is one of the reasons why sentiment has shifted more bearish in the short term. Adding to this, XRP is currently trading below all major moving averages, which is another indicator that momentum has shifted in favor of sellers. When price stays below key moving averages, it often reflects sustained weakness rather than a short-lived dip. On top of that, the Relative Strength Index, or RSI, has moved into oversold territory. While oversold conditions can sometimes lead to short-term relief bounces, they do not automatically guarantee a reversal. In strong downtrends, assets can remain oversold for extended periods while still continuing to drift lower. So traders are now watching carefully to see whether this oversold reading leads to a bounce or simply pauses before another leg down. Another important detail in this entire discussion is how payment volume is being interpreted. The XRP Ledger metric we are discussing only measures the total amount of XRP moving across the network. It does not differentiate between coins being bought, sold, or simply transferred between wallets. This is where many traders can misread the data. When large spikes in volume occur during a price decline, especially if some of those movements are linked to exchanges, the market often starts to assume that distribution is taking place. That assumption alone can sometimes increase fear, even if the underlying transactions are neutral in nature. In some cases, analysts point out that large transfers during downturns may actually indicate internal restructuring by institutions or exchanges preparing liquidity for market volatility. These types of movements can make the network look extremely active without necessarily reflecting real demand. That is why experienced traders rarely rely on a single metric when evaluating market direction. Instead, they combine price action, order flow, exchange inflows, and on-chain behavior to build a clearer picture. Right now, the mixed signals between rising activity and falling price are creating uncertainty across the XRP trading community. We are also seeing increased attention on exchange behavior, which is another key factor in understanding potential sell pressure. When large amounts of XRP are moved onto exchanges, it is often interpreted as a potential preparation for selling, while withdrawals typically suggest accumulation or long-term holding. Although not every transfer leads to immediate selling, the timing of these movements during a price decline adds to cautious sentiment. Traders are now closely monitoring whether this elevated activity continues to flow toward exchanges or stabilizes in cold storage wallets, which could help ease fears of a larger distribution phase. Market sentiment overall has become noticeably more defensive. After the breakdown of key support, many short-term traders have reduced exposure or tightened stop losses, leading to lower confidence in quick recovery scenarios. This shift in sentiment often amplifies volatility, because even small price drops can trigger additional selling. In environments like this, the market becomes highly reactive to any new data, whether it is technical or on-chain. As a result, every spike in XRP Ledger activity is now being scrutinized more closely than it would be in a stable uptrend. At the same time, there is an ongoing debate in the community about whether this activity represents accumulation or distribution. On one side, some argue that sustained high network usage is a sign of strong underlying adoption and could eventually support price recovery. On the other side, skeptics point out that without corresponding price strength, the activity could simply reflect repositioning during a downtrend. This disagreement is exactly what makes the current phase so uncertain, because both interpretations have valid points depending on how the data evolves in the coming days. Looking forward, the most important thing to watch is whether XRP can stabilize above its recent lows while maintaining this elevated level of activity. If transaction volume stays high but price stops falling, that could suggest absorption and potential accumulation taking place in the background. However, if activity remains elevated while price continues to drop, it would strengthen the case for ongoing distribution pressure. This is the key divergence traders are focused on right now, and it will likely define the next major move for XRP in the short term. For now, the market is sitting at a critical decision point. XRP is showing strong network engagement, but weak price structure, and that combination is creating tension between bullish long-term narratives and bearish short-term momentum. Until one side clearly takes control, volatility is likely to remain elevated, and traders should expect continued fast reactions to both technical levels and on-chain updates. The next few sessions will be extremely important in determining whether this spike in XRP Ledger activity becomes a foundation for recovery or simply a background feature of a broader sell-off phase. And finally, stepping back from the noise, what we are seeing right now is a classic crypto market conflict between data that looks strong on-chain and price action that tells a more cautious story. XRP Spotlight will continue tracking these developments closely, especially as we move deeper into this high volatility zone where every movement matters. Make sure you stay tuned, because the next shift in either price structure or ledger activity could define the next major trend for XRP.